Good evening, everyone. My name is Joy Chen. I'm with the Eaton Fire Survivors Network. It is my great pleasure to welcome all of you and my old friend, Jeff Prang, our Los Angeles County Assessor. This evening is going to be a really exciting time for us to get answers to many burning questions about how we as disaster survivors can get access to the tax relief that we need right now at this stage in our recovery. So tonight, here's what's ahead. LA County Assessor Jeff Prang will be making a brief presentation. I will be going through some questions that are frequently asked questions that his office often receives. And throughout this time, I invite all of you to write your questions, your comments in the chat, because we will be bringing those forth in an interactive session with our assessor. So please feel free to use the chats, put in your questions. If you have a comment, welcome everyone. If you have a comment, there's no need to disguise it as a question. Go ahead and put your comments in there. If Jeff says something that's really interesting that you want to underline, go ahead and put your aha moments in the chats. Let's keep those rolling as we go. And please definitely stay until the very end, because we have some really exciting announcements coming up about our 6-month fire anniversary party and some free survivor media training that we have in store for you. So with that, let me introduce to you my old friend, Jeff Prang. I have known Jeff, gosh, we're just talking, we've known each other from the early 1990s when we were young people in politics. Jeff has always been like one of those shining stars that I've always admired. Jeff was a staffer at Ruth Galanter's office, and then he was a West Hollywood City Council member, a shining star there. I knew him then when I was a deputy mayor. He was mayor of West Hollywood, and he has been our LA County Assessor, I guess, since 2012 or so, I guess, Jeff. He's in his 3rd term. And what I admire about Jeff is that he's always determined to keep this office at the forefront of innovation and service. He is determined to always make this the premier property assessment agency in the United States. So thank you to Jeff on behalf of all of us for your deep commitment to serving us all. And I guess I'd like to start off, Jeff, and introduce you by asking, what the heck is the property assessor? Are you the tax collector? Tell us a little bit about what you do and what we need to know as disaster survivors. Back over to you, Jeff.
Thank all of you for joining us for this hopefully will be an informative presentation. I did want to express my condolences for everybody who's having to endure with the recovery from this fire, but I want to do what I can do to be helpful to you. And
Jeff, can I just stop you for 1 second? I'm hearing a little bit of feedback. Is everyone else hearing that? Cannot hear. Garbled voice. Jeff, I feel like you were talking. We didn't have this problem earlier in the practice session. Do you want to just talk a little bit?
Sure.
That's better. Maybe if you just speak a little bit loudly and a little bit louder. Can't hear. The voice does sound a little bit garbled.
Do my best. It's still a long day. It could just be that I'm
no, it says, can Jeff clean his lens? Do you want to try cleaning your lens a little bit? That might make it a little bit clearer as well.
All right.
It's the sound. Someone says it's muffled. Brian is on. Oh, hi, Brian. Hi, Brian.
Hey, Joy.
It's hard to hear him.
It's quite garbled.
Sounds like his microphone. Okay, Jeff, let's just try again, because I want to make sure that we have good audio.
All right. Well, so tell a little bit about the assessor. The assessor is not the person who collects the property taxes. We are real estate appraisers. We determine the value of property. The person who collects property taxes has a very intuitive title. She is called a tax collector.
Ah,
And we do, more formally, the treasurer and tax collector. And we are joined this evening by Sergio Marquez, who is um, Director of Public Services at the tax collector's office. One of the biggest confusions people have in my office is our role with property taxes, and almost everybody gets it wrong. So here, of confusion.
okay, great.
Well, really just a very brief presentation about some of the things that we are doing right now, the big picture issues that impact property owners. I know that you probably are tired of hearing speeches from politicians, and I'll try not to do that, but we do have some very important information that I want to convey. When your property is damaged due to
Jeff, I'm so sorry. We are having some trouble with your audio. I wonder if it makes sense for you to, someone says he should leave the webinar and try signing in again. Because we're getting a bunch of, can he call up from his phone and leave the sound on the phone camera on his desktop? That might help because it's a little bit difficult to hear you. I think because we do want to also have a good audio recording later. So I think that might be helpful. If everyone just hang on for 1 second, if you don't mind.
do you hear me?
That's so much better. Yes, thank you for doing that.
Okay, well, let me pick up where I left off. I was going to just have a brief presentation on some of the programs that my office manages that are particularly important for property owners in the fire agent. So if your property is damaged due to an earthquake, a flood, a fire, you are entitled to property tax relief. It is a program we call Misfortune and Calamity. What this does is it allows me to lower your assessment to reflect the damage to the property, which will lower your taxes until the property is restored, at which time your pre-fire tax base will be restored, even if you have to rebuild your home completely. The only qualifications to qualify for misfortune calamity is that the damage has to exceed $10,000. That can include smoke damage, and you need to file the claim within 12 months of the incident date, although I am sponsoring legislation that will extend that application period to 24 months because we know people may have a lot on their plates and they may miss deadlines. The one thing that the misfortune calamity application also does is it automatically postpones your property tax payments. You also have experienced that up to this point. The reason being is because we're going to be lowering your assessment for tax purposes. You'll be getting a recalculated tax bill to reflect that damage, as well as a property tax refund if you already paid your property taxes. I did want to share a little bit of data that we've collected since the January fires. Our preliminary reviews estimate that the total assessed land value in the affected burn area is about $22.5 billion, with an additional $11 billion for the improvements. That's the buildings. Between both Palisades and Altadena, the general ratio of land to building value is 68% to the land. Obviously, the reduction in assessed value will also reduce property taxes and is likely going to have a pretty big impact on local government for years to come. There's about 23,500 parcels in the wildfire area. 12,000 have been completely destroyed. Another 2,000 were damaged. We're still evaluating the remainder of it. To date, we've processed 17,000 misfortune and calamity applications, applying assessment reductions. And of those, 60% of the reductions were due to an application by the property owner, but 40% of the reductions were done proactively by my office, even though a claim had not been filed. We estimate that the total assessed value loss for all property may reach as much as 12 or $13 billion, which is a pretty big impact, but a great deal less than the 20 to 30 billion we originally estimated. We sent, my staff actually did a pretty Herculean job at reassessing properties. They got most of them done within 90 days, and we issued a notice that most of you should have received. It's called a Notice of Assessed Value Change. These were mailed to the property owners in the fire area, letting you know what the change in your assessed value would be for the current tax year. This generated a lot of confusion because if your home was completely destroyed, you may have gotten a notice of assessed value change that said you're still responsible for 50% of the annual taxes. And the reason for this is that we work on a fiscal year on July 1st until June 30th. And what that notice of assessed value would reflect is that the taxes that were due from July 1st of last year till December 30th still apply. The taxes from January 1st of this year till June 30th have been eliminated or reduced due to the fire. But the tax bill you get in the fall will reflect the entire damage. In effect, the notice indicates the prorated amount of your property tax bill. If you applied for a misfortune calamity, you can now go on our website and you can type in your property address. It will tell you the status of your claim, whether it's been approved or denied. We're not denying very many, so the likelihood is that your claim will be approved. Another program that we manage is something called decline in value. If your property was not physically damaged, but you believe that it's lost value because it's in the burn area, there's another program called a decline in value. This is what happens when your assessed value and your market value, the market value of the property, the current market value of the property falls below your assessed value. Your assessed value is more or less what you paid for the property plus the annual cost of living adjustments. So we're going to be applying decline in values to those properties where appropriate. I'm going to stop here to move on to questions, but I did want to encourage you to do a couple things. One, to go on our website and check out your property. There's pictures of your property before and after the fire. You can sign up for our homeowner alert, which will help protect you against title fraud, which we're very concerned might be something that's where homeowners are at risk. I also did want to note I have a couple of staff members on the call. Brian Donnelly is a director for my department. He's a subject matter expert, and he may be able to answer some questions that may be more beyond my technical expertise, as well as Candy Ng, who's a field deputy in my office, and also Sergio Marquez, who is the operations chief and the treasurer tax collector, and he's going to be able to answer any questions that pertain to his office. So happy to move on to questions at this point.
All right, Jeff, thank you so much for that overview. Now I think we have a really clear idea of what the assessor does. Your real estate experts as opposed to property tax collectors. Those are very, very different roles. I have a list of questions that we have received before, but one question, if you don't mind, that I was probably the biggest question that I've heard around all of this is this whole triggering of the reassessment seems to be for total loss situations, right? There's two basically groups of survivors that we have. One is total loss and the other is smoke damage or partial loss. If we don't have a total loss, there's no triggering of the reassessment at all, right?
Well, for either one, we're not going to reassess your property as long as you build to what we term substantially equivalent. And substantially equivalent means roughly the same size and the same use. If it's a single family residence, it has to be returned to a single family residence as opposed to a duplex or a commercial property. So as long as you're within that envelope, your pre-fire tax base will be restored. Whether your property was completely destroyed or just partially destroyed, the standard is the same. Just with the partially destroyed, it's just a little bit less of an impact. But your Prop 13 property tax base is protected.
And when you say substantially the same, you mean expansion of 10%
So
or less?
that is a good point that you're raising. It is actually it's actually a point of great frustration for me. So keep in mind that there's two different ways we're going to be looking at properties. One of them is from a building perspective, the building code. That's something the city or the county of Los Angeles is responsible for. I am on the valuation in the assessment standard, and they're different. So under the governor's emergency proclamation, they are allowing an expedited building permit up to 110% of what was previously on the site. The challenge is that that is a building code allowance. That does not conform with California assessment standards. Our standard is substantial equivalence. Under best practices established by all 58 county assessors, with a lot of guidance from the State Board of Equalization, that additional 10% would normally be viewed as new construction and subject to a reassessment. It would not subject your entire property to reassess. Let's say, for example, if you have a 1,000-square-foot home and you take advantage of that 10% and build 1,100 square foot, the 1,000-square-foot value will in the tax base will be restored. The additional 10% will be assessed at market value. I did sponsor a piece of legislation with Nick Schultz from Burbank that would allow us to align the building code with the assessment standard, because I don't think any of us want to nickel and dime property owners in the fire area with supplemental tax bills. And I will say that I'm shocked that the state assembly killed it. So so that bill will not be moving forward. I am working with my staff. We're talking to county lawyers to see if there is some administrative way that I can apply that standard that we want the legislature to do. We're very concerned about establishing precedents. You don't want 58 county assessors doing the assessment standards differently. It's we create absolute chaos. But I'm very concerned about not passing along these costs to the property owners.
Yeah, we're getting a lot of comments in the chat saying thank you and fight for us, please, Jeff. So when you say substantially the same, you mean the same, right? 10% more is not substantially the same.
So to say this, but I need to give you some parameters. So basically, substantially the same is a similar square footage. We do not put a numeric value on this, but if you just need a kind of concept, 5% would be the maximum of differential. So if you have a 1,000-square-foot home, you rebuild it to 1,004 square feet. We're not going to care about that. It's when you start getting over that, 10% would be clearly outside the normal standard.
10% is basically more. Unfortunately, Jeff, your audio has gone out again. I don't know what's going on. People are saying in the chats that they cannot hear you again, and it's hard again for me to hear you as well. I'm gonna maybe try calling in from your phone or whatever you did earlier, it worked, and then now it's suddenly not working so well.
And you sign out, sign back in.
Yeah. Okay. That's fine. We'll wait for you. Be good to have good audio here. Hi, Brian Presnick. It's good to see you. Brian Presnick of the EFSN is here to co-moderate with me. Hello.
Enjoy. Hi, everyone.
Jeff, while we do that, should we have Sergio just tell us what his office does as long as he's here?
Sure.
Sergio, maybe just tell us a little bit about what your office does.
Sure. So the treasurer tax collector is responsible with billing and collecting property taxes. So during this process of the devastation with the fires, we've been playing a support role for the county assessor's office, really just encouraging taxpayers, property owners to file their misfortune and calamity claims. We've been assisting at disaster recovery centers really helping people get their property tax bills. And at this point, the assessor's already processed over 17,000, decline in value for misfortune and calamity. So we've actually already issued about 17,000 tax bills. And these are adjusted tax bills, many of which will result in a reduced tax, as well as some of them will result in refunds.
Okay, great. Thank you so much, Sergio. Jeff, are we back?
Can you hear me?
Oh, perfect. This
All right,
is
so
yeah.
you're on my audio is on the phone and visual is on the computer.
Perfect. It's perfect now.
Um,
Okay, well, I have a list of questions I'd like to go through, and I see that we have a bunch of questions in the chat.
and
Jeff?
one of the things I was going to suggest, so Candy from my office, I want to ask her to capture all the questions in the chat, and we will respond to those in writing if we don't get to them, and then we'll give you that document back with answers to all those questions that you can share with everybody.
That is so great of you. Really, really appreciate that, Jeff. I mean, I just love how your office is just always so committed. I mean, at every step, just always trying to go above and beyond. We really appreciate that. So first question for you, if somebody submitted a form months ago and hasn't heard back, what do they do?
Well, the first thing, they should go on our website, assessor.lacounty.gov, type in their property address, and on the main page, if you have a claim pending, it will tell you whether it's approved or pending or denied. You should be able to get that updated information today, because we have actually processed the vast bulk of all these claims already.
But you just maybe have been late, or people just haven't received the form back?
They should have received the notice of assessed value change by now. If although one of the challenges we are having with our mail is that, as I mentioned, 40% of the claims and the reductions that were applied, we did proactively. The property owner did not submit anything.
Amazing.
So we don't have current mailing addresses. Most property owners have their tax bill mailed to their home. And if you don't update your mailing address, we're going to mail all of our correspondence or your property tax refund check to the address on record, which may be the destroyed home. You can update your mailing address online. You can register a profile with your property, which will allow you to update your mailing address to file things like the homeowner's exemption or the misfortune and calamity. If you've not filed a misfortune and calamity claim, we urge you to do so. You can do that online as well, and that will allow us to know where you are and how to reach you. We have 14,000 email addresses from property owners, so we've been communicating with them by email as well.
That's great. Okay, so if we have a smoke damaged home, because we're constantly getting questions about taxes and smoke damage. So if we have a smoke damaged home, I see a question in the chat. We received a letter from the assessor's office informing our assessed value has been reduced. Should we still file a misfortune and calamity claim?
That sounds like they didn't file one. They probably did file one just so that we have their updated records. Brian Donnelly, do you have any thoughts on that I might be missing?
Sure, you're exactly right, Jeff. It's really best for them to file. That's not a problem. Go ahead. The form is available on our website, assessor.lacounty.gov. And not only is it good to update their contact information, but it gives them a chance to submit information about what perhaps the insurance company's damage estimate was, or whatever the cost to cure the smoke damage was. And we'll need to see that so we can make an appropriate value change.
And one thing to keep in mind with these proactive reductions, we did that through a mass appraisal approach. It's possible that you may want to that you may think we were not accurate. You don't want to communicate with us to give us additional information to make sure that the reduction that we apply actually reflects what was there. And as I did mention, smoke damage does qualify for misfortune and calamity relief.
Cool, that's awesome. Brian, do you have a question?
Yeah, the next question goes to how much can I rebuild? But Jeff, I know you already answered that. but a lot of our listeners kind of are just coming in. And so maybe a quick summary again of the tax code is different than the building code and what that means for folks as they're rebuilding. Just a quick summary.
So once again, this is a point of confusion between different type of government agencies and how we do our job. The county is allowing you to rebuild with an expedited permit up to 110% of what was there. My standard for your assessed value is substantially equivalent. So if you build to 110%, unless I can find a way to exclude that, that additional 10% might be subject to additional assessment and a little higher property taxes. A lot of people are wanting to build even more. You can build whatever you want, but generally speaking, anything that's over substantially equivalent will be taxed at market value. So if you decide to build an ADU, that ADU will not have any special tax benefits. It'll be assessed at market value.
Appreciate that. Back to you, Joy.
Okay, that's very helpful because I see that a lot of the questions that have come in the last 10 minutes have been about this 10%, if I build 10% or 20% more. And I think what we're hearing is if it's any more than substantially equivalent, which sounds like it's 5% to 9% more, then the new increment will be assessed.
I probably should mention, because there was another point to make things even more confusing. There was a piece of legislation following the Woolsey fire, which allows you under a governor's disaster proclamation. It allows you to build to 120% of value, not of size, but of value. We think almost nobody will qualify for this. In order for this to benefit you, you're going to need to get your house rebuilt in the next 6 months, and nobody's really going to be able to do that. So it was. I don't think it was a very substantive piece of legislation. I think it was kind of a placebo that was done in the wake of Woolsey, but it has confused people about the 110% and the 120%. We do know that some LA County and LA City officials were telling people you could build up to 120% of size, which is not accurate. But my recommendation is don't even worry about that 120%. Almost nobody will be able to qualify for that. If you do, we will be able to make that determination and apply it on your behalf.
Okay. And yes, what we heard to the questions in the chat, Peter Partain, if it's the incremental amount of any rebuild is what gets us. It's a marginal difference between what your rebuild and what was there before. Only that is reassessed at the current market.
That's correct. We're not going to reassess your entire property at market value.
Yeah. Okay. So a bunch of these questions are similar. What happens to my property tax when I rebuild? Same thing. Can I transfer my property tax base to a new home if I decide not to rebuild?
You can. There's a couple of different programs. The primary one is called Proposition 19. That's so if you decide to sell your property, you can buy another property anywhere in California and transfer your tax base with you when you buy a new home. You have to do this within 2 years. And so if let's say you owned your home since 1990 and you have a pretty low tax base, you can buy a new home and take that tax base with you to the new home. You can, and once you're 55, you can actually transfer that tax base up to 3 times. The caveat is that you have to build if you transfer your tax base, only the like-for-like value is transferred. So if your home was assessed at $1 million, you can buy another home for $1 million, and your taxes will remain the same. If you buy a home that's more expensive, the difference over the like-for-like similarity will be assessed at market value, so you'll get a new blended rate. And on our website, Proposition 19, if you decide to buy a more expensive home than the one that you're leaving, there's a tool on there that will tell you what the new adjusted tax rate will be. It'll be lower than market rate taxes, but it will be more than what you're paying now. That's only if you buy a home that is of greater market value than the home that you've lost. So
we are rebuilding, it's based on the square footage, but if we buy a new place, it's based on value instead of square footage. Is that right?
It's based on value. Brian, correct me if I'm wrong.
No, that's correct. That's
So
a
if you
value test.
rebuild, it's just based on the square footage
It's size, yes.
size. But if you buy a new place, if you want to transfer it, it's based on market value. But
On the
that's way,
value.
way less valuable, right? Because
But
let's say you bought your house, and let's say you built your house 30 years ago, and your tax base is super low. I mean, if you buy a new place, you're buying it at a much higher market value, and so
that's correct.
the tax basically the tax benefit that you transfer over there is suddenly going to drop massively.
No, so here's the way it works. So let's say you bought your home for $300,000, and let's just say that's your assessed value. But let's say today your home, if you were to sell it the day before the fire, you could sell it for $1 million.
Yes.
So you can now go buy another $1 million house.
Oh, I see. Okay. It's not...
take that $300,000 tax base with you. So your taxes would be the same in the new house as they were in your home in Altadena.
That's great.
But if you buy a $2 million house, the first $1 million will be based on the $300,000, and the value over that would be assessed at market value. So you'd get a blended rate.
Excellent. Okay, that's really helpful. Now, what should a homeowner do if they believe their reassessment is inaccurate? Can we challenge it, or...
First thing they should do is they should call our office and talk to an appraiser. And generally, if you think that we are wrong, the best thing you can do is come up with some evidence. If you have some market comparables, something that justifies your position, we try not to make mistakes, but obviously we do, particularly when we're doing mass appraisal in a very short period of time. So if you have information that supports your value, that would be helpful to us. If you present that and the appraiser still disagrees, you can file something called an assessment appeal. There's what's called the Assessment Appeals Board. These are real estate professionals appointed by the Board of Supervisors, and they sit like judges, and they will arbitrate the difference between our value and your opinion of value of the property.
Great.
And if you still don't prevail, then you can take it to court.
Jeff, since we're on Prop 19, can we go back? Sorry, my internet went out really quick. We have a question about mobile homes in Prop 19. Is there anything that mobile homeowners should know about Prop 19 if they're thinking about buying a house?
I don't believe that Proposition 19 applies to mobile homes. Brian, do you have any?
That's a good question. I don't have the answer right on the tip of my tongue. I know there's different ownership or different types of mobile home taxation. Some, if they're particularly older, then those are still with the DMV. We'd have to get back to you on that question. Well,
that is, I think somebody else mentioned that to me a bit ago, but generally speaking, Proposition 19 applies to real property. Mobile homes are regulated as personal property, but that is a good question. I know that there are some mobile home parks, particularly in the Palisades area. We probably need to get an answer to that sooner than later.
Okay, great. Jeff, you had mentioned before that you're working on some legislation in Sacramento. Can you give us a sense of what you're working on and maybe things that we should be aware of coming down the pike, or things that we should try to support?
Sure. Yeah, there's a couple of bills. One of them that is particularly important for Altadena is being authored by Senator Sasha Perez. It's Senate Bill 295. I believe that's the number. So one of the things that's particularly acute in Altadena is we find a lot of people have owned homes perhaps for several generations. Maybe it was grandpa's home and then your mom and dad's, and you inherit it. A lot of people continue to pay the tax bills that their parents were paying. Maybe your mom and dad passed 10, 20 years ago, but you never came in to update the names on the deed. What we were discovering at the disaster centers is, Mr. and Mrs. Smith came in, said, we want to apply for property tax relief. And we looked on our records, and it showed it was a different Mr. and Mrs. Smith. And they said, well, that's their mom and dad, but mom and dad had passed. The challenge is if your name is not on the deed, it is not your house. And so you don't qualify for property tax relief or for transfer of your tax base. That being said, if you did inherit the property and you failed to update the ownership records, you still have an opportunity to do that. You could come in and demonstrate, provide death certificates and other documentation, and we can apply the property tax benefit that comes with inheritance retroactively. The challenge is the current law limits that window to 6 months. And we know I think it's reasonable to assume that if your life has been really upset, as people's have been, that 6 months is not a very long time. So this bill will extend that correction period from 6 months to 3 years. It'll only apply, as it's written today, will only apply to the folks who are affected by this fire. That will give us more time to get information out there to try to identify those property owners and to help them get their records squared away so they can take advantage of these property tax relief programs. That's one important bill. There's another bill by, I'm sorry, I gave the wrong number. That's Senate Bill 293. There's another bill, Assembly Bill 245 by Mike Gibson. This does a couple things. It extends the rebuild requirement of the governor's emergency proclamation for an expedited permit, puts a 5-year cap on rebuilding. Under this provision, this extends that to 8 years. It also allows us to apply a decline in value assessment to properties in the current fiscal year. What this means is we assess your property annually on January 1st. We call it the lien date. It's kind of a snapshot in time. The challenge was the homes began burning on January 6th. So to do a decline in value, we'd have to wait till next January 1st, which means that there would be a whole year of potential savings lost. This bill will allow us to move that date to more or less to project that the homes that were all devalued as of January 1st of this year. And the other bill is by Senator Ben Allen. It's Senate Bill 663. This actually all duplicates what is done in the Mike Gibson bill, extending the rebuild requirement from 5 to 8 years. It allows us to allows what's called a use base to remain on damaged or destroyed property until the property is rebuilt or returned to its original use. This is for property owners who have an exemption, such as religious institutions and nonprofits. One of the challenges that we discovered is if you're a church that burned down, churches have religious exemptions. They don't pay property taxes. But the law says that you have to be actively engaged in the nonprofit business to qualify for that exemption. If the church is burned, they're not actively using that property for that purpose, which would be really unfair. So this will ensure that those property owners continue to take advantage of the tax exemption during the rebuilding process. And then again, just to the other bill that the state assembly killed is Assembly Bill 1253. I certainly encourage you to nudge your legislators to tell them that that was an important bill and they should do something to put it back into play if they can.
Got it. Thank you very much. Brian?
Jeff, you talked earlier about refund checks.
Yeah.
Maybe this is for Sergio. Is there a place that we can go on your website to see maybe if a refund check has been issued for a property?
So this is where things get even more complicated. The property tax administrative system has been designed for maximum public confusion. There are multiple departments that each have a different role. Here's just give you a quick tutorial the way it works. So when you buy a house, you record a deed, or if you do new construction, you get a permit from the county. Those deeds and permits come to my office, and we determine the value. We then send that data over to another department called the auditor controller. They're the ones who tell you how much you owe. They're the ones who issue refund checks. The data that when they're done with their data, telling you how much you owe, that goes to the tax collector's office, who sends out the bills and collects the payments. So the refund checks came from the auditor controller. But that's much more in sync with what the treasurer tax collector does. So let me ask Sergio to offer a little bit more insight on that point.
Absolutely. So while the treasurer tax collector collects the money, we do issue some refunds, but in this case, anytime there's an adjustment in value that results in a refund, it's the auditor controller. I'm going to drop in the chat here the information to actually reach out to the auditor controller's office. You can discuss this with one of their tax services representatives. There's a phone number that I put in the chat, but I'll say it also, 213-974-8368. And you can also send an email to propertytax@auditor.lacounty.gov. And in the subject line, you should put buyer refund inquiry. And that'll be the best way so they can expedite that response.
But to reiterate, if you did not file a misfortune and calamity form, you need to do that, or you at least need to go and update your mailing address so we can deliver that refund check to you. We've got hundreds of them returned to the auditor controller, and we're trying to identify where all those folks are so we can get them their money because they know this is a critical time for you, and that money would certainly be very important.
Yeah. All right. So what if a homeowner has not updated their property's ownership records in a while? I guess this, you talked earlier, maybe it's not been updated for generations. How could that impact these benefits?
Well, as I mentioned before, you won't qualify. If you're not the owner of record, you don't qualify for tax benefits. So you need to begin that process by bringing us. There's a number of different documents that are going to be required, and we can normally apply that retroactively without penalties. But failure to do so could subject you to up to 8 years in back taxes, and not in back taxes at the rate you've been paying, at the rate the taxes would be at the time of the death of your parents. So we do a reassessment. Let's say they died in 2012. We would reassess the property as of 2012, and the taxes would be based on that amount. It's really important that you get this done so that you don't get, if you lost your home, could probably be nothing worse than getting 8 years of back taxes on that home.
Okay. Ryan?
Jeff, you talked a little earlier about scammers, and I actually went on your website and filled in the information that you requested. But maybe one more time, quickly remind everyone how they can prevent themselves from being scammed.
Sure. So we have a program. It's called the Homeowner Alert. It's free. All you have to do is sign up with your email address. The challenge is if somebody records something against your property, such as a grant deed or a deed of trust, you'll get a letter in the mail from the registrar recorder, usually 30 to 45 days after the recording. But in the event of a type, somebody will record a grant deed against your property, then they'll go and take out loans against it before you even know what's happening. And then when you get control of your property again, you may be on the hook for all this debt. By signing up for the Homeowner Alert, you will receive, every time something's recorded on your property, you'll get an email notification within 48 hours. Then you can determine whether that was something that was supposed to happen. And if it wasn't, it gives you instructions as to how to report that to authorities to begin the process of trying to stop them before they can take more advantage of you. But please do sign up for the Homeowner Alert. It is one small and easy way you can protect yourself against scammers during this process.
Okay. Ryan, do you want to pick a few of these questions that we see?
Yeah, many in there. Quick one here. If there were 2 homes on a lot and we rebuild back only one, will our tax be decreased?
I'm going to let Brian Donnelly, he's our subject matter expert on that, and answer that question.
Yeah, that's an interesting question, and I hate to sound bureaucratic, but I'm gonna have to give you it depends, right? So let's say you had 2,000 square foot houses on the lot, and you only build back one of them. I'm just coming up with an example. I don't know what the situation is, but let's say that's the case. Then probably it would be less. But let's say you had 2,000 square foot houses and then you built back one 2,000 square foot house. We're going to have to think about that. It's going to vary by case, but in general, if you build back less, we can take that into account.
Great, thank you. Next one it says is, if my old home didn't have a garage, but I am required to include a 2-car garage for a new rebuild, will that additional square footage apply to my overall square footage considered when determining base year value transfer?
I'd say we'd have to, by law, we'd have to add for that. I can't think of, unless Jeff, you can think of something. I can't think of a way
No.
around that.
It would be, generally speaking, that would be considered new construction. It's something that was not, anytime you're adding something that was not there, you know, the laws, the property tax benefits due to the misfortune and calamity protect what was there before the fire, not something that's new. On the plus side, a garage is assessed less than an ADU, so that the increment to your property tax base won't be as significant if you're building livable space.
Great, thank you. Seems like this one's a form question. Where do I locate a form 706, which my tax accountant is requesting?
I don't think that's one of ours.
All right.
Sergio, is that one of yours?
No, that's not one of our forms.
Yeah, I'm looking through some of the
Okay.
forms.
Sounds like an IRS form.
Yeah. There is one thing we do encounter a lot. There's a lot of confusion between property taxes and income taxes, and it's possible that's an IRS form.
Gotcha. So similar to kind of the garage question, people are asking about basements. What if they build a basement? Is that in the same envelope? Is that similar, or is that going to be assessed additional with the square footage?
I believe that would be new construction, would it not, Ryan?
Yes. And if it goes unfinished, like it's kind of like storage, then that would be a lower value than if it was finished out as complete living space, if that helps.
Yeah. Okay.
And then some other people are asking similarly to, if they currently have single story and they want to build more stories, I would assume the answer is still that's in square footage. That's going to be added.
Yeah, the rule of thumb, if you're adding square footage, the additional square footage is reassessable. But once again, to repeat, if you have a 1,000 square foot home, and you build a second story, which makes it 2,000 square foot home, the first 1,000 square feet would be restored to your pre-fire tax base, and the additional 1,000 square feet would be assessed at market value, so you would get a new blended rate.
What was it, Jeff, that you had said about the benefits for if you are age 55 and over?
That's Proposition 19 that says that you can transfer your tax base when you sell your home and buy a new one. Under Prop 19, you could sell your home and you can transfer your tax base 3 times, 6 times if you're married. You can transfer it to a home anywhere in the state of California and to a home of any value, with the one caveat that if you buy a home where the current market value is higher than the current market value of the home that you're selling or the property that you're selling, then there will be a new blended tax rate.
And what does age have to do with this?
Oh, so Proposition 19 applies to homeowners who are over 55, victims of a natural disaster such as a flood, fire, or earthquake, or those who are severely disabled.
Okay, so if you're 55, you just qualify for the same thing that you qualify for as a fire survivor. There's nothing different.
That's right. The difference is, for the fire survivors is the transferability is per incident. If you're 55, you just automatically get the ability to transfer 3 times.
Okay. Good.
Question here says, what do we do if we have applied for misfortune and calamity status and our status says under review? Do we submit insurance remediation assessments? If so, how?
Brian, I'm not sure about the insurance portion of it.
Yeah, the insurance that we could use that as something, one of the factors that we can look put into the evaluation. So the best thing to do is send your question with including your name, address, and if you happen to have your assessor ID number, send it to relief@assessor.lacounty.gov. So relief@assessor.lacounty.gov, and that's the special mailbox for misfortune calamity claims.
Thanks. I'm seeing a lot of things in here about Prop 13. Is that a typo, or is there a Prop 13 in addition to what you talked about with Prop 19?
So Proposition 13 is the law that governs property assessment in California. And Proposition 13 essentially says that when you purchase your property, we determine the market value, and then you are assessed at 1% of that market value. So if you buy your home for $500,000, your 1% of that is $5,000. That's your tax bill, and that will never increase more than 2% a year, unless there's a change in ownership, such as adding or deleting somebody's name for the deed, or doing new construction where you're adding square footage. So Proposition 13 is the tax base that we are protecting for under misfortune and calamity for fire victims. It basically says when you rebuild your home, if your home was completely destroyed, when you rebuild it, you're building a brand new home. But Proposition 13 will protect your tax base. You'll still pay the same amount that you did on the home that was destroyed.
My favorite question for Joy, is this meeting being recorded? If so, will we receive the recording?
Oh, shoot. Is it? Thank goodness. Okay, it is being recorded. I just had a heart attack. Yes, I will have it up. I'll have it up tomorrow, and you will get an email since you've registered with the link to the recording. You can also find the recording on our YouTube channel, and I will show you our website in a moment and show you where to find all our recordings. Jeff, there is a question about garages, and I guess it's a good segue into a question about like what counts as the square footage of a house. So if you have like a loggia, basically it's like an outdoor balcony that's covered, or a garage that's not fully enclosed. Are those what counts as part of the square footage? Does it have to be like fully enclosed, or would, we have a lot of these balconies, patios, loggias,
So
garages?
there are some nuances. There are some nuances in how we address that. I'm gonna let Brian kind of walk us through that.
Right. So in terms of what the new construction, like let's say you had a blank piece of property, built a new house with a garage and whatever little extra features you want to have on it. Each element of that construction has a cost and a value. So the house, we have a cost per square footage for a living space. We have a separate lower cost for a garage. If it's a covered patio or something like that, that's got a different cost to it also. So all of it's new construction, but it's all assessed at different levels, if that makes sense.
All right. Well, great. This has been an incredibly informative session. We really, really appreciate you all being here. And we appreciate your offering to take any unanswered questions and provide them back to us. We'll provide answers to all of them inside of our Discord. For anyone here who is not a member of our Discord, I'm just going to put a link into the chats right here. And I want to welcome you all to just click on this, and I'll just point you to a few things. This is a link to our brand new website of the Eaton Fire Survivors Network. We have a couple of really exciting events coming up. I'll also show you where our videos live. If you take a look at this website, you'll see, first of all, scroll down to the very bottom of the website and you will see a link to our YouTube. And that's where you will find this session starting tomorrow, and all of the sessions that we've had. We've had really informative ones on insurance fraud, how to navigate your insurance claim, many on those, and all sorts of things in there, assets in there. I'd also like to point you to the events link at the top of this page. And we have on that events link, we have today's session with Jeff Prang. We have free survivor media training next Wednesday. I'll be leading that with a national expert in media as well. The Eaton Fire Survivors Network, we've already gotten over 250 media stories that continue to keep our needs, our recovery in the news. This is a really important thing for anyone who wants to learn how to better advocate for yourself, advocate for our community. We're always needing survivors to step forward and be ready to speak to the media, willing to speak to the media in order to keep our needs front and center, and to get the resources and accountability from institutions that we need. So please join us next week. And most importantly, I want to invite everyone on this meeting to our 6-month anniversary, fire anniversary survivor press conference. It's just amazing to think that July 7th, Monday, July 7th, right after the holiday, is the 6-month anniversary of both the Eaton and Palisades fires. So all survivors of the Eaton Palisades fires and friends are welcome to join us. It's going to be a really special morning. It's actually the first time that the Eaton Fire Survivors Network has gotten together in person. So hugs will be free all morning. We'll have a press conference where we'll present to the world exactly what's happened in our recovery and what still needs to happen. We'll be focusing on the failures of our insurance system because we've found that actually we'll be presenting the results of a survey that we're finding that 75% of people who are displaced in these fires are still not home. And insurance is a major reason, the failures of our insurance system. So we'll be calling for accountability there. And we'll just be having a grand time. So let's not spend our 6-month anniversary of this very, very traumatic event alone. I hope that you'll all join us there. RSVPs are on this page. And so have a look around the website, but before you leave tonight, please sign up for the free media training as well as our 6-month party. We hope to see you in Altadena at a great restaurant and bar there that morning. And with that, let's see, I think unless there's maybe one last question, Brian, is there one burning question that you want to present to Jeff in our last 1 or 2 minutes left?
I don't see anything really that we haven't covered, so I'll pitch it back to you, Jeff, and say, Jeff, what kind of parting words do you have for us based on all the questions that you've been receiving from homeowners?
We've covered most of the big issues. I did want to encourage, as a leave behind, 2 last things I encourage everybody to do. 1, sign up for the homeowner alert. And 2, on our website, you can subscribe to our newsletter. I encourage you to do that because we're going to be that's where we'll be sending out our updates on things that are going on in the fire area. A lot of helpful tips for property owners, but that will help you keep connected to our office. We're going to continue to be at the disaster centers as long as they're open. We really are concerned about what you're going through to rebuild your homes and your lives. We want to make sure that we're here to hold your hand and walk you through what could be a very difficult process to navigate. And so we want to help you, and please keep in touch with us.
Great. Well, thank you so much, Jeff. I see a lot of questions. People want to see where this recording will be and asking us to post it in the Discord at the top of our website on the upper right corner. If you're not in the Discord, just click on that brown button. You can come into the Discord. We will be posting this recording in the Discord as well. The events, they're all on our website. When you RSVP to the party, you will receive an email with the exact location in Altadena of that event. Thank you all so much, Jeff and Sergio and Brian and Candy, for your service to all of us. Your dedication really shows. We're grateful to you for all of that. Grateful to you for spending your evening with us tonight. Thank you to all of you for joining us, having such great questions. I hope that you've come away. I've learned a great deal tonight and look forward to sharing all this information with my friends and to sharing the recording with them as well if they have further questions. So with that, I'll wish you all a good night. Thank you all for joining us, and we look forward to seeing you on Monday, July 7th. Bye-bye.
Thank you.